coverage is extended to liabilities for third-party wreck removal, for example. With general policies, they tend to not address coverages which can be insured by more specific policies. So the sort of typical third-party energy industry exclusions, coverages which may be insured by specific policies. So employees, employee benefits, control of well, which we've talked about, seepage of pollution, failure to supply, D&O, directors and officers liability, very specialist market, professional indemnity, very tricky area. Then product recall, again, usually a specialist area, owned, leased, rented property, war is usually separated out. And then some things you can certainly buy back. So the sort of things you could probably buy back in many cases on an optional basis: removal of debris, products liability, completed ops, pollution from facilities, care, custody and control, and maybe employees on an excess basis, not on a primary basis. So they're usually, not in all cases, but broadly speaking, they're the sort of things you might expect to buy back or be able to buy back that insurers like you would give. Now, there may be some things where you just can't get coverage because the market just doesn't want to give it for a whole host of reasons. And these are the sort of things, and I'm not going to list them all, you can read them as well as I can, that probably you would regard as generally not available. Why not? You know, why are some things capable of being bought back? Why are other things not? To a degree, it's a matter of commerciality. Here's some rationale. Very nasty. Don't go anywhere near it. It's polyvinyl chloride something or other. It's something you don't want to be anywhere near. Okay? So if anyone says have a plate of PCB, don't take it. Stick to the vegetables. No, I'm afraid there are so many of these very long terms which usually involve nasty chemicals or chemical compounds and things like dioxin, which is a carcinogenic. Things like asbestos, you know what asbestos is. Asbestos is jolly good when it's inert. As soon as you start drilling holes in it or spraying it in the air, it can cause critical fatal lung disease. Underground resources is another, oil and gas. Underwriters will not give coverage for liability, if there is any, for damaging someone's reservoir, for example. Okay. Sorry.
What is excess?
Excess? Excess. Yes. Okay. Employer's liability, most countries will require you to have employer's liability coverage. Okay? How much you have to have is a matter of local law. But let us say the local law requires me to have 5 million. Okay? I might buy 5, I might buy 10. Most underwriters writing this kind of liability, you get underwriters whose business is to write WCA and employer's liability. Okay, and that's all they do. The sort of underwriters I'm talking about will only write it on an excess basis, so they may write in excess of $10 million. It's the excess point I'm referring to.
Sorry, just out of interest, that PCB is phenol-chlorinated benzene, which is an additive that they put into transformer oil. And that was the problem. When the transformers were being decommissioned, they were finding the PCBs in the oil. And this is now being phased out. They can't use it.
Thanks, Cliff. There are some of the rationales. And I think most of them are pretty obvious. Just some miscellaneous points. Proposal forms will often be required. They can be quite detailed. You will often get a lot of definitions in liability policy forms, a lot of definitions of everything. Premium, well, that's going to be a function of a whole host of factors. There's some. What limit are we selling? What's the excess point? If it's a company, what's their turnover? What are they doing? Where are they doing it? What facilities have they got? Wells, pipelines, employees? What's their claims record? Where they're doing it is very significant. I mean, there will be a huge difference between the likely costs of arranging the same sort of policy to cover operations in America than there would be to cover operations in Australia, say. Now, I'm going to briefly touch on a subject which is relevant but slightly on the side, and that is conventions on pollution, IMO, the IMO, International Maritime Organization. It's a body of the United Nations, and there are several funds established essentially to ensure that there is adequate financial compensation available for oil damage which results from spills from tankers of oil, what they call persistent oil. So this has absolutely no relevance to a fixed platform, okay? But it will have relevance to a cargo-carrying tanker of an oil company. Sometimes it's not always clear, particularly with so much equipment, when one of these conventions will apply and when it will not. And I'll give you an example of that later on. I'm not going to dwell on these, particularly as they're marine, but I put a couple of slides together with some basic information on them, how they came about, what they do, and there's an explanation of how they're funded. And then side by side, I've set out the features of the two main conventions, the 1969 convention and the 1971 convention. And these are adopted internationally by a large number of countries. Of course, some countries will have their own very specific legislation. Now, if we look at Northwest Europe, interestingly, our government, the UK government, convened a conference in the early 70s, which led to a convention on civil liability for oil pollution damage resulting from exploration for and exploitation of seabed mineral resources. Makes you out of breath just reading that. Seemed eminently sensible. It was modelled on the 1969 convention that applied to marine cargo of oil. It never got adopted. As an interim step at the time, OPOL, a strict liability regime I referred to earlier, was created just as an interim measure. But that convention was never adopted, and there doesn't seem to be much prospect of it being adopted now. So what was an interim measure in Northwest Europe, OPOL, still exists and still works. So that's sort of Northwest Europe. You look at the US, we've got federal law, we've got state law, and probably the big act there is the Oil Pollution Act, which followed the Exxon Valdez. Very much a response to it. It spread the net of responsibility very wide. And it's a question of who is a responsible party, and that's defined in the Act. And I think to give you an idea, in the BP case, the responsible parties were deemed to be BP, their co-venturers, Transocean, the drilling company, supplier of the Deepwater Horizon, and I'm possibly some of the other contractors. And interestingly, it just doesn't spread it wide. It has some nasty little aspects of it, which can be quite worrying. And there's the first one. It provides for strict joint and several liability. Okay? So whether you like it or not, if you're one of those responsible parties, you're potentially in it all. So you can see for offshore facilities, it applies to the leasee of the license block, the holder of a right, and the owner or operator of a pipeline. Post-Macondo, it's certainly again under under review. These are some of the limits that apply to it. Very interesting. I think the American legislators and Congress thought they'd been really clever when they passed this, and lots of big numbers were there. The one thing that became apparent was that there was a limit on potential claims under it from third parties, not for pollution. And very early on in the piece, BP actually said that they would not take advantage or seek to take advantage of the limitation that was afforded by the Act. I think in retrospect they may have think now that was not a great decision, because frankly if they had to tried to take advantage of it, they couldn't be in any worse position than the one they ended up in. Because again, I think as Cliff mentioned, the total pre-tax charge on their accounts has just risen to $55 billion. Now, there are probably no more than 4 or 5 oil companies who could have taken a hit that big and still be in business. I mean, BP actually undertook a disposal program, disposal of assets, and I've lost count how big it was, but I think they disposed of assets totaling over $30 billion. So that's strictly a US thing, okay? But it includes damage for, injury to, destruction of, loss of, or loss of use of natural resources, cost of assessing the damage. Natural resources are very widely defined. Now, I'm not saying this is of immediate consequence to you, because it's very unlikely you will ever be underwriting here anything with those sort of US exposures. But it's very interesting to look at, because as East Africa and the whole of Africa develops, there will be more and more legislation about pollution, and people will look at different ideas, whether it's some of the Northwestern Europe ideas, some of the American ideas, others. So it's worth keeping in touch with these things. Now let's get to Nairobi. I'm very, very upset at your ignorance. Now this is interesting. This was a convention here in 2007. It's now been ratified by enough countries that it came into force earlier this year. Now, one of the interesting things about this for our business is that it applies to all seagoing vessels above 3,000 gross tonnage of any type whatsoever. But it appears not to apply to mobile offshore drilling units or floating production and storage units, FPSOs, when they're on location engaged in exploration and production operations, but seemingly will apply when they're in port or being towed to the field. So we've already got a situation where we've got a convention, but we're not entirely sure for one sector of the business how it's going to work. So, you know, there may well be aspects of this very recent convention which will be the result of, which will have to be legally tested. We shall see. I mean, it's quite clear, usually it's very clear when certain things apply and when certain things do not apply. But so often you get this nasty little grey area in the middle, and here's one of those nasty little grey areas. So next time I come here, I will expect you to explain to me how those grey areas are going to be fixed. Okay, why are they purchased? I mean, this is the most obvious slide in a way. Statutory obligations. We have no choice. We are commanded by law to do it. We may have contractual obligations that require an oil company or a contractor to buy certain things. We want to protect our balance sheet. We may have pressure from our stakeholders, whether they're shareholders or others. We want to be able to be seen to be doing the right thing. Reputational issues. Any managing director who's standing in front of a hostile press when there's a big problem is going to be slightly comforted, and maybe what he says will be a little bit easier if he knows he's got some insurance behind him. And probably the first question he'll be asked by some smart journalist is, how are you going to pay for this? And if he can, without saying too much, indicate not only has his company got assets, but they have appropriate insurance, that's a question deflected. PR issues, public relations, always important. Okay, that's a very quick run through. Any questions? Oh dear, someone's got a question.
Just out of curiosity, when BP had to dispose of assets, what that billion of assets, does that have any ramifications in the industry that it's not necessary to take such huge risks? And going forward, are we going to see a change from some of these big operators buying insurance? That's number one. Number two, if they had wanted to buy this before this risk happened, would there be a provider for such?
Right, excellent question. Let me deal with the second question first, because in a way it's the easier one to answer. Let me come back here so you can hear me.
Could you repeat the questions as well? That sounded interesting, but
Well, I think the first one you're essentially saying what effect BP's disposal program and the attitudes has had on other companies. And the second question is, what would have been the situation if BP had bought insurance? Broadly, okay, and how much could they have bought? Well, the second question is, if BP had bought all the insurance they could have bought, it would have made very, very little difference. Because prior to the loss, and it's not very different now probably, for the sort of liabilities that arose, and particularly pollution, I would have said BP, if they'd have gone into the market, could not have bought more than $1 billion. I wonder whether they could have bought $1 billion, do you think? Well, they had a corporate liability program, though, didn't they? That wasn't... I mean, to tell you briefly, the market will pay as a result of Macondo something like, I think, about $3 billion. That is made up of probably something like 600 million for the loss of the drilling rig, probably a couple of $100 million, if that, for the BP's partners who did buy control of well cover, and the rest of it will largely be liability payments, payments under the corporate liability programs of the contractors. Most of the contractors, I think about 3 of them, had liability towers of coverage up to about $1 billion in layers. But back to BP, if BP had bought, we'll say, all the cost of well control they could have bought, let's call it $1 billion. $1 billion is a lot of money, but it's not very big compared with 55 billion. Now, much of that 55 billion was fines and penalties, which no one would have covered them for anyway. So however you break it up, if BP had bought all of the insurances they could have bought beforehand, frankly, to BP, it would have made no difference. Well, I say no difference. What's $1 billion between friends when we have 55 of them, you know? As to whether it's made a difference, BP's disposal program, it made a difference to them, obviously. It had a very big impact, the whole incident, on their share price and their earnings. I think it didn't, the disposal program probably didn't have much effect on anybody else, but the event did. And every oil company is thinking, what if it happened to me? You know? And the answer is, for a lot of them, if it had happened to them, they'd have gone bankrupt. As I said, there's, you know, there aren't more than about 6 companies that could, 5 or 6 that could afford to take that sort of hit. It's an interesting case, but the only people who've done really well out of it are the US lawyers. Nobody's quite sure, but I mean, I hear stories that the legal fees came to $1 billion. I mean, the number of legal firms that were employed were incredible. I think probably 50. I mean, I think BP employed about 7, didn't they? I mean, just incredible number. Okay, any other thoughts, questions? Yeah.
The BP situation, if you can take the positive out of it, from BP's point of view, I think that they were able to withstand the financial strain, because at that time the oil price was over $100 a barrel. If that happened to BP today, the current oil price, it would be a very, very different picture. And the one real positive from BP's point of view, despite all of the costs that they've incurred and the bad publicity that they've incurred, there's clearly oil there. You know, the fact that blowout occurred, where they were drilling, there's something down there. So in the long term, they're still going to be able to go back in there, and they will still be able to access that field and be able to produce from there. So, and the rate of flow would indicate that it's a highly valuable field to have. So it will never recover the costs that they've incurred. The other point I was going to make, following on from Paul's point, what would have been interesting from a liability point of view, and one of the things that makes the energy sector so interesting, the liability policy wouldn't have covered fines and penalties. BP made lots of voluntary payments because they wanted to avoid bad publicity. The liability policy pays for their strict liability, so there would have been an interesting debate with the underwriters. The underwriters said, was that strict liability or was it voluntary payment? So that would have been an interesting debate.
Are done in areas where they're often restricted zones, there are going to be very few true third parties. Because frankly, if a third party is there, very frequently you shouldn't be there. So third party in a pure, in connection with offshore platform, isn't necessarily a big issue. Of course, if you have oil escaping, which drifts 100 miles away, plenty of third parties potentially. But it's very interesting. I think Jeff was making the point. Construction policies usually have a property damage section and a liability section. Liability section provides third-party liability coverage. You very rarely ever see any claims on it. And if you do, they're usually in connection with land-based operations, because there just aren't many third